For a start, I think I actually want to touch a little bit to share with you the journey of EDOTCO over the last 10 years. So in 2013, we started out with a carve-out of towers from the EDOTCO Group of companies. Predominantly in Malaysia, in Bangladesh, as well as Cambodia. And subsequently, we expanded our operation into the South Asian market, with a combination of organic and inorganic growth. And essentially, I think our expansion into this market has given us scale to operate in this market. And as of today, I think you would see that in 9 of this market, in 6 of these markets, that we are actually either number 1 or number 2. In the thick of COVID, in 2020, we actually expanded our operation towards the emerging market into Southeast Asia. With a combination of 4 strategic acquisitions, we made our presence in Indonesia. We actually entered into Philippines by buying the PLDT towers, and we did 2 strategic acquisitions in Malaysia, especially having a play in the strategic state. With this, I think today we own and manage close to about 58,000 towers. And now in 2023, given the challenges that we're facing in the market today, we are really shifting our focus a little bit from growth, moving more towards value creation. We'll talk a little bit about the value creation areas that the focus will be to address some of these challenges that the industry is actually facing. So EDOTCO has been growing rapidly over the last 5 years. In the last 5 years, I think we had a double-digit growth, not only in terms of revenue, but in terms of towers, EBITDA, as well as profitability. We started off with a carve-out of Axiata Towers, but today, I think 76% of our revenue are actually from non-Axiata companies, right? So we work with all the Tier 1, Tier 2, and Tier 3 in all the markets that we are present today. And today our colo ratio is at around 1.66 times. Of course, I think there's a lot of improvement for us to grow in the coming years. And we manage close to approximately 19 exabyte of data that's passing through our towers throughout the 9 footprint that we are operating in. I would like to share with you 5 key trends that we see that is impacting our business, at least what we see in the short to medium term, that is probably relevant to all of us today. First is we are seeing that mobile data are actually tapering down, post the COVID situation. And what we see is there is a shift, right, from mobile data towards the FWA, fixed wireless access. Right, we'll share a little bit the stats on this in our subsequent slide. Trend number 2 is if we see that macroeconomic challenges with high interest rate, high inflation, depreciation of the local currency against the US dollars, have to a certain extent increases the uncertainties in the market. And essentially what we see today is to a certain extent, globally, I think you have seen that the multiple for tower companies have been impacted. Point number 3, we also see that MNO are tightening up their spending. Really being selective in terms of their new build, cutting down capex, and to a certain extent, in the short term, it has an impact on quality. At the same time, we also see some shifts in terms of the MNO strategy, going into potential sharing that has encouraged them to go for mergers and acquisition, and potentially also delayering a lot of their assets that's core to them in the past, but today, in order to fund the future growth of capex, especially in terms of 5G network, I think MNO are delayering and monetizing some of these assets. While all this seems like negative news, right, to the industry. The good news is we see that demand for data in the next 5-10 years is going to be driven by the Gen Z and Gen Alpha. You probably see that 80% of our data traffic consumption in 2030 will be actually created, by the Gen Z and Gen Alpha. And hence, it is important when we build the network in the future, we have to build to cater to the needs of the Gen Z and Gen Alpha. Last but not least, the final trend is on the deployment of new technology. A lot of new technologies are being trialed out today. 6G standards are being worked on, the millimeter waves, and all these will create more opportunities for infrastructure coming for towercos in the future. If you look at during post-COVID, you will see that data has grown exponentially. You will see that on average, data is growing between 50 to 70% during the COVID period. However, over the last 3 quarters, post-COVID, we have seen that mobile data growth has actually tapering down, right? Growing at just an average of 11%. This is comparing to the market in the South Asia and Southeast Asia region. Whilst we seeing this trend, we also see that there is a major shift to, and you see that there has been exponential growth in terms of the fixed wireless. In key markets in the region, you would see that fixed wireless revenue today actually make up close to about 90% and growing as a percentage of our total mobile revenue. And essentially, by 2030, it's predicted that the fixed wireless access is actually going to grow and making up close to about 30% of the total mobile revenue. So we are seeing this trend, mobile data tapering down, growth tapering down, but there's a shift towards fixed wireless that's really ramping up, and traffic are really growing exponentially in this area. Second, if you look at the challenges that we are facing in macroeconomic, high interest rate, high inflation, depreciation of the local currencies, it has actually created a lot of uncertainties in the market. If you look at our contracts today in most of the countries are actually local currencies. However, costs essentially, there will be some component actually are in actually the US dollars. And that means that given that this trend, the cost of doing business in some of these countries has actually gone up. And in fact, the depreciation of the local currencies have gone down quite significantly as well, especially in the South Asian market. This, to a certain extent, have put a lot of pressure in terms of our margin. Even though we are growing in local currency terms, however, in US dollars, returns in US dollars have been quite weak, right, to that extent. And it is important for us today, when we look at our investment, we need to look at returns in the form of US dollars. Given the exposure that we are facing with the depreciation of currencies. All this adding up, if you look at the trends across globally, there has been an impact in terms of the multiple of tower companies. And generally it cuts across the board. Some are actually more and some are actually less. And if these uncertainties continue to prevail, I think that multiple is going to be very difficult to go to the previous level that it was before. MNO, as you see that they are under pressure, so performance of MNO in some of the markets have not been great, and they have been cutting down in terms of spending. Essentially, really going on selective build, and to a certain extent, they will forgo quality of the investment that they have to actually make. We also see that today MNO are outsourcing a lot of this build of the capex infrastructure, yeah, and outsourcing it to tower companies, moving more towards a capex to an opex model, and this will allow them to scale up, yeah, in terms of their capex investment. We also see that today MNO are also willing to share a lot more as compared to before, given the pressure that they have to reduce the cost per gigabyte. And hence, they are probably a lot more open towards doing mergers and mergers, and essentially to realize the synergies that could potentially arise in a merger situation. Yeah, and you would expect that there are number of M&A mergers that's happening in the MNO space in Indonesia, Malaysia, Thailand. You could expect that there will be more M&A to come, right, in the market around the region. We also see that there is a delay in terms of rollout of 5G, as you would expect that the business case coming from 5G could be a lot more challenging for the MNO today. And to fund essentially 5G, I think the MNO is looking at to delayer more of their assets. Yeah, and this would actually create more opportunities for the tower company. You can see it started with tower, fiber, data centers, and you probably see more assets that MNO would probably delayer to raise capital to fund their capex investment in 5G. This is one part of the positive news. Yeah, traffic growth essentially going to come from Gen Z and Gen Alpha. Today, if you look at Gen Alpha, they were born, yeah, straight into getting exposure to the internet. And these people today spend close to 6 hours of screen time and growing as we go along. And 43% of the workforce in 2030 will be made up of Gen Z and Gen Alpha. And their average usage by 2030 will go up, yeah, to around 215 gigabytes per month. That's a huge number from where they are today. And hence, it's very important that in the time to come, that network will be built based on the requirement of Gen Alpha. Yeah, you're looking at speeds of 100 gigabyte today towards 1 terabyte, yeah, in 2030. Latency from 40 today probably down to around 10 milliseconds, right, to cater for the needs and requirement of the Gen Z and Gen Alpha. So this is a positive news, and that means that they need more infrastructure, more towers, right, to actually deliver the sort of quality that is expected by the consumer. Today, we also see new technology are being rolled out. The 6G standards are currently being developed. The 5G millimeter waves are probably in trial in most markets. For once, it's actually in trial in Malaysia. And today, people are talking about the LEO satellite, right, with Starlink presence. And all this new technology will give us the opportunity, right, new opportunities. The demand for infrastructure could potentially increase, essentially to address the shorter radius and the smaller hexagon area that is required, yeah, to cater, to address for these new technologies. What does it mean? And where are the areas that we should be focusing in terms of our value creation? Data-driven. In the future, when you talk about 5G, in terms of doing your predictive maintenance, yeah, and you need to deliver a level of 99.999, that means that you need to leverage on data and AI in terms of your predictive maintenance to be able to deliver that sort of quality, that sort of service level that is expected. Second, focusing on CapEx, OpEx optimization through a cost-efficient technology, as well as through partnership. The third aspect is also about getting the pricing structure right. Yeah, the pricing in some of the markets that we are present today, the sort of pricing that we have or are experiencing probably would not be sustainable in this environment of challenging macroeconomics that we have today. Yeah, so it is important for us to make sure that the pricing that we have moving forward will need to be a lot more dynamic to address some of the variable factors that we're seeing, especially we're going into products like energy that's very significantly to interest to currencies, and to inflation. Point number 4, customers are talking ESG, right, and are committing to deliver the ESG reduction in carbon network, and that part of the scope to reduce the carbon neutrality, the bulk of it sits with tower company, and hence it's very, very important for us to deliver that, because moving forward this could be a hygiene, for example, that is expected of a tower company in order for you to participate in any transactions moving forward with the MNO. We have seen some glimpse of this with some of the customers today, and hence it's very, very important that we start focusing on this. Point number 4, yield. About 5 now, yield management. We cannot stress the importance of this. Yeah, to actually see how you can increase your revenue streams on the tower side that you have. Probably need to be a lot more innovative, what you probably can do. I mean, just to share a little bit, some of the things that we have actually done in Sri Lanka, where we have a digital advertising placed on the tower. These are probably relevant sites that you probably could do that, towers or poles that you have in the city centers in strategic locations. EV, because of the power connections that you have, are probably an area that tower poles would probably be focusing on to actually increase the revenue per site. Last but not least is to leverage on new technology and innovation, right, to really solidify your offering. So we know that things will continue to be a challenge, at least in the near term. So all of us, I think we really need to embrace the situation today, right? And I think hence, I think we also need to change some ways in terms of doing things. What we have done in the past may not necessarily work what to do in the future. And these are some of the areas of focus that we felt is necessary to really create value as we move forward. So just key takeaways, I think we have expanded significantly over the last 5 years, but macroeconomic challenges and the key trends that we are looking as well pushes us to probably move more towards focusing on value creation for our stakeholders. Thank you.